Hi and welcome to the latest market update for the quarter ending September 2025. As always, I'm joined by Steve Garth from Principia Asset Consultants. Thanks for joining us, Steve.
Yeah, thanks, Rob.
Excellent. Well, the last time we were standing here was the June quarter, and we saw, since then, we've seen markets climb to all-time highs. Have there been any particular drivers of that growth?
Markets have been hitting all-time highs around the world. In terms of drivers, not really. The markets just seem to be going up. There is some economic bad news out there, particularly in the US. Markets just seem to be ignoring it at the moment. Rob, if we start by looking at the Australian market, you can see that really big fall back in April the 2nd. That, of course, was the announcement of tariffs. But ever since then, market's just on a roar. It's up 4.6% for the quarter and a very impressive 10.6% for the whole 12-month period. So very strong in Australia.
Excellent. So strong returns in the Australian markets. Looking overseas, have we seen global markets perform?
So if you thought 10.6% was good, and it is, the global markets are even better. Look at this. Across the world, we're seeing returns of 20+%. Yeah. Now, normally, Rob, when we've been doing this, we've always talked about how the US has been driving, the world index. It's been the biggest performer. But when you look this time, it's very even across the major markets in the developed market world. Yeah. US, Europe and Japan, all returning around 20 or more than 20%. So in a diversified developed market portfolio, it's 23%. And the emerging markets, which have been a bit of a laggard for a couple of years, they're also up 23% for the last 12 months.
Last 12 months. Excellent. So we've seen over 20% returns across developed and emerging markets for the last 12 months. Any particular standouts? I can see China's done quite well there. Any particular reasons?
China is the standout, up 36% for the year, 20% in the quarter. And when you ask, is there any reason for that? Again, the answer is no, there's not. Okay. In fact, that is just irrational exuberance going on. It's all driven by the local retail Chinese investors there. So I think even the Chinese authorities are getting a little bit nervous about that.
Wow, some excellent returns. So we've seen excellent returns across equities, both in Australia and overseas and in emerging markets. Moving over to the bond markets and the fixed interest markets, what have we seen there with continuing concerns about increasing debt levels and economic data, etc.?
Yeah, and of course over in the US, interest rates have been coming down. They've been coming down in Australia. They're probably on hold for a while now. But as interest rates are coming off those highs we saw a couple of years ago, the 10-year bond yields have been creeping down. And of course, as bond yields go down, bond prices go up. So all in all, it's been a very good quarter for anyone in a global bond portfolio and a very good year as well. So bonds are back doing what they're meant to do, a source of steady income as well as being the defensive part of the portfolio should equities really tumble out of bed.
Come off a bit, yeah. So strong returns in equities, positive returns in bonds.
It's all good.
It's all good news, isn't it? So moving on to another asset class though that's not only had a positive return, but you could say an exceptional return for the last 12 months, and that's gold. What can you tell us about the gold price?
Gold, it just keeps going up. Now, for a long time, gold does nothing. Yeah. But the last couple of years, probably with the start of interest rates starting to come down post 2021, of course, war in Europe, war in Gaza, people do tend to go to gold as a safe haven asset. Yeah. But what's really happening at the moment, central banks are getting out of US dollars and buying gold. And you can see in the chart there, we've got the US dollar index. That's US dollar against a basket of major currencies. Australia's only a small part of that. But you can see that the US dollar index, called the Dixie, has been going down and gold's been going up. So it's really a statement by central banks that feeling a little bit easy about investing in US dollars. We'd rather be in the safe haven gold.
Okay, excellent. Thank you for that. Well, that's a wrap for the quarter ending September 2025. Thank you for joining us. As always, if you have any questions or concerns, please pick up the phone, give us a call. Until next time, we'll see you next quarter.